Hey everybody, Dave Brown with First Class Lending. I'm getting some questions lately on how has and is COVID affecting the economy, the mortgage market, the real estate market. I want to give you a quick update and a few points here that might help with that. Number one is we are seeing the economy bounce back pretty quickly and a lot faster than a lot of people had thought. At the beginning of this month, we had the jobs report that came out for May, and it actually surprised a lot of folks that we added back over 2 million new jobs. We still have a lot of people out there that have lost their jobs, and our hearts go out to them. But the economy does seem to be putting a lot of those folks back to work a little bit more quickly than we expected. And then just today, we had the retail sales numbers come out, and those also well exceeded expectations. As a result, we're seeing the stock market bounce up. The challenge is that interest rates tend not to like good economic news. And since we're seeing some good economic news, interest rates are trickling up. They're still near all-time lows. Everything is pretty much still sub 4%, anywhere from the low threes to the high threes, depending on the transaction. But we are seeing them trickle up, and I think sooner rather than later is going to be a better time to purchase because of interest rates. The non-qualified mortgage market is starting to make a comeback. And what that means is some of those loans that don't fit in the box, where somebody's income doesn't document traditionally to qualify with tax returns, we can use bank statements, or we can use on a rental property the actual rental income from the property to qualify folks. So that's starting to come back and open things up a little bit more. Lenders are looking at self-employed borrowers a little bit more carefully, doing a little bit more verification and validation to make sure that business is still valid and creating revenue. And we can help our clients with that, so make sure that you talk to us about that. We'll help you. A little reminder is forbearance is not forgiveness. So forbearance should be your last option. If you can afford to make your mortgage payments, make them. Because if you go into forbearance, that could have derogatory impact on your ability to refinance or purchase down the road. Not necessarily, but it might. And so you don't want to do it just because you can. You only want to do it if you have to. Keep in mind, VA loans and reverse mortgages are great options for your clients out there that qualify for those. I've had some cases where clients that couldn't qualify for a traditional loan, but they could qualify for a reverse mortgage for a purchase transaction. A lot of people don't know you could do it for that. And one of the great things about a reverse mortgage is it is payment optional. You do not have to make a payment. And then lastly, what we're seeing is a lot of sellers and listing agents are wanting buyers that want to come see their homes to be pre-approved before they even allow them in the home. Kind of discourage the looky-loos, keep traffic down to a minimum in the homes. All understandable in this age of COVID that we're all dealing with. We can absolutely help you with that pre-approval, and it's good to be pre-approved sooner rather than later anyways. And just so you have a little bit of a heads up, in most cases I believe they're asking people to wear gloves, masks, booties, all of which in most cases they can provide for you if needed. And then they're disinfecting homes in between showings, just again to ensure everybody stays safe and healthy. If you have any questions about anything that's going on out there, anything we can help you with, please reach out. Dave Brown, First Class Lending. Thank you.